Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The information shared here is for educational purposes only and is not a recommendation to trade.
Good morning, everyone. Thanks for joining me this morning. It is 7:36 Chicago time. This is episode number 2715. It is the 19th of November, 2025. It's been a busy couple days. We had the Futures Industry Association Expo here in Chicago, in which there was just a lot of meetings and a lot of familiar faces. So I've been gone. Last week it was family circumstances. And so I have not been consistent with the TraderBite. But I keep doing it because it's been 25 years of trading, and 22 of those was always in some sort of a community or a prop group or whatever. And I'm talking about, old style prop, not today's prop. So I like to stay connected with the markets. It's tough for me to call myself a trader when I don't know what's going on in the market on a day-to-day basis. So here we are. Let's take a look at the Convergent Trading pre-market summary sheet. The key thing to note today is that NVIDIA, or NVIDIA, depending on how you want to say it, has Q3 earnings, and basically the stock has been the support for the entire market. It's just a ginormous stock, and it reports today. So expecting a lot of apprehension, a lot of positioning, especially in options today. So NVIDIA after the close. Again, as per usual, I'm not going to go through the news items. There's a lot here to consider. There's also a lot on the calendar. We got UK inflation rate at 3.6% in line. The prior's 3.8. Core inflation came in at 3.4% in line versus the prior 3.5. So inflation's coming down in the UK. And we had balance of trade come in a little bit better, 59.6. I think 16 billion of that was with China, which is lower than the prior 17 billion, and so on and so forth. So there's a lot now, and there's a lot ahead. We have the FOMC minutes at 2 o'clock Eastern today. You got to pay attention to that. Crude oil comes out today, and then tomorrow we get the missed non-farm payrolls release comes out tomorrow instead of, normally the first Friday of the month. We get the number for the prior month, and tomorrow we're getting September. So since we were shut down in October. So that's where we stand currently. Looking at what's happening, your eyes have to come to this group here. Crude oil, after having a very bullish engulfing day, basically filling a gap below, ripping through 2 days of balance and pushing through to the other side and finishing quite strong yesterday. Crude looked like a trend day up. It's actually a neutral extreme day up. It's even more bullish. Today, crude is down 2.65%, unbelievable, on 174% of RN. So it is running 74% hotter at this time of day in terms of range than the average of the last 20 days on pretty good volume. You're seeing gold getting a pop up above the 4,000 again, and silver is also coming up as well with copper. Cryptos keep getting clobbered. Cryptos, I think, got as far down as 88,000 in Bitcoin. In any case, this sheet is available to you every single morning. It's posted by Convergent Trading on its Twitter account or X account. You can get this at x.com/conv trading. Highly recommend that you follow that feed. And then there are some other links for you to look at there in terms of the glossary of terms and abbreviations. Let's get into the market. Quickly, the S&P is in a multi-distribution profile this morning. Pretty active price discovery so far in the overnight session on a really good volume and really good range, 55.5 points, which is higher than the one standard deviation of the Globex session range over the last year, 252 trading days. Okay, so we're getting pretty good range. We've got pretty good volume, and it's going to continue to be. It's very likely to continue to be pretty active this morning. Unfortunately, I won't be here for the morning session, but I think it's likely to continue to do its thing. Again, don't forget FOMC meeting minutes at 2 p.m. The market is very nervous about what the Fed is going to do on December 10th. December 10th, the market had priced in a 25 basis point cut. And that, if you go to the FedWatch tool on cmegroup.com, you'll see that that has dropped to like 43%. So the market is not so confident in the Fed cutting rates in a couple of weeks, and that's causing some nervousness, in addition to the fact that the market seems to feel like it has over-levered on the AI story. And so what we have here, as you can see on this chart, is we made highs way up here, and then we dropped. Then we came back, we made a lower high, and now we're migrating down. The important thing from this chart, when I look at a profile chart, is how is the point of control moving versus price, right? Price, lower highs, lower lows so far, and the point of control shifting down from day to day. So what we call this one-time framing down. One-time framing down. This was interesting. This day here was interesting on Monday because Monday really looked like it would check down and then push up, and it just was not able to do that. I did the TraderBite on Monday with the expectation that we would likely squeeze to 67.80. If you watched Monday's video, you knew that I was looking for it to drop and then push through and get to aim for the target of 67.80. It got to 67.74.75. The prior day's point of control is 74.50, and then sellers came in and ended up extending down and closing down, giving us a lower high, lower low. We fixed some of the weak structure, the single prints below, and then we formed some more. Yesterday, it was really obvious early on to me that every attempt to go up into the prior range and hold the prior range was refuted. It simply would make a strong effort. There were two really excellent in the morning, in my opinion, on a short-term basis, really excellent short squeeze setups, long setups. I'll tell you about those in a minute. That looked really fantastic, and then it just wasn't able to hold on. So it just kept pushing up and getting clobbered, pushing up and getting clobbered. And then this morning we're opening in range. We are right here, right now in the 66.56 area. We're opening in range in what is a contested profile. It's just a kind of a fair bit of price discovery. Just kind of it's a nondescript profile, really, that the market has left us behind with. So we don't have the kind of profile where we see consensus. Since then, I'm going to focus on volume now. Since then, we've had these kind of jaggedy profiles, and what that says is price discovery is quite active. There is a battle going on here, and what that means for us is elevated opportunity for profit, and as well elevated opportunity for loss. So that's where we are. Let's take a look. I'll show you real quick yesterday a setup that I talked about in the Convergent chat, right? So, no, I don't have enough bars printing. That's fine. This is a footprint chart. This is a 2x8 PNF chart, in case you're wondering what the heck you're looking at. And what we got here, this was the IB low right here. This is the first hour's low. It puts a line across. Very important reference. And what it does is it pushes through on pretty decent volume, pretty aggressive drop, and then it has the inside bar, really standard, and then it pushes and takes out that low, but not by much. And you could see a massive difference between the delta that went into the big drop and the delta of the additional low. And then we start to bob around under the IB right at the 6,600. This is a combination classic short squeeze setup, meaning looking for a setup long, and a liquidity check setup in that it drops through, but then where's the follow through? Shouldn't it drop through, consolidate, and then drop? What it did is it dropped, did the continuation, came back into the IB, and it was just unable. You could tell in the order book, if you looked at the DOM, you looked at the footprint, it was just unable to squeeze these guys lower, and it explodes to the upside. If you missed the initial bar, there were opportunities to trade an inside bar break, and that led us back into the RTH VWAP, RTH mid, and I warned, hey, stay off the shorts now, because it did reject below the IB, below 6,600. Higher time frame players are likely to come in, and then it pushes all the way back into the prior day's low. And then as it approaches the prior day's low, it is unable again to continue. Look at it. Here's the prior day's low is this green line, PLOD, prior day's low a day. And it's not able. And then we get this test, lower retest, lower retest, lower retest, as if to say, hey, get on this bus. We're not able to do it. Get on this bus. Lower highs, lower lows on the swings, and the rotations, which are these zigzag lines right here, the rotations starting to expand to the downside versus the upside. That's another warning if you're long to take profits or cover. And then it does the same thing again. It drops below the VWAP, in the middle of the range, puts in a higher low in the exact, does this look familiar? In almost exactly the same configuration. A strong push down, pretty poor negative delta, consolidates, and then explodes to the upside once again after putting in a higher low versus the prior low. So very tough, in my opinion, if you're not a scalper or somebody who's really short term. Pretty tough to hang on to that kind of trading when that happens. Here's the overall picture. So actually, let me pull up the composite. Here's what we need to be aware of. You know, we made new all-time highs back here, came back down, bunch of new stuff, whatever, and then we got stuck inside of this big selling day for 2 weeks almost. Then we finally make new all-time highs again. New all-time highs, new all-time highs, new all-time highs every day. And then we get to that 53, and then we stop. Then we pull back right into this body, right into this big day, and we show a spike. We show an excess low. But what's interesting here is it creates an excess low, which almost always there's a higher probability of a run when that happens. When we have a day closing like this, you can see this one failed right here. And then it makes a lower high. So this, for us, for those people in the Convergent Trading's accelerator program, this is a spike retest fail type setup. And we ultimately ended up taking out that low in this session here. And so what we have here are the beginnings of what is likely to be balance, and I think it's basing to try for another high. The conditions support more money flowing into the markets and a probable new high. From what I see, I mean, we're looking at a Fed that is very likely to keep cutting. We're looking at a president who is talking about giving a $2,000 tariff dividend back to U.S. consumers. Not sure if that's going to happen. These are all stimulus measures, and so this is likely to be reflected in the stock, right? More consumption, more profits. So that's on the composite. So let's look at today, because I need to go. Let's look at today. Today for me, this red zone here is the over-under. As long as we hold above that, and we're above it now, as long as we hold above, my expectation is we pull right back into the point of control, into the DGPs. We're opening in range. So we're expecting to about a 74% historical probability of touching the prior settle. The prior settle's right here. And the expectation is we're likely to pull down on the open as long as it does not continue to hold below this. It can poke it as long as, kind of like this zone here from a few days ago, as long as it does not hold below it. My expectation actually is for it to take out the high. So once again, I'm going to be looking at it breaking through and pushing into this 67.20 area today. That's my primary scenario right now. Yes, we are one-time framing down and so on, but it is seeing support on new lows. It is having a harder and harder time holding the low end of the range when it makes lows. For example, here's a lower high, lower low. Where did it settle? Up here. Here's a lower high, lower low. Where did it settle? Up here. It's not settling in the lower quartile of the range. It's settling higher despite the lower high, lower low. Yesterday, lower high, lower low. It did come all the way back. It settled below the mid, but still, it's not telling me that the sellers are taking a territory and holding on to it. So that's the primary scenario. If that fails and we end up breaking through, I'm looking for a weak retest into this red zone, into the DGPs, into the full session mid, full session VWAP, and I'm looking for the overnight, the prior settle and overnight stats to be broken, and we just continue this ride down and whipsawing back and forth. That's your second scenario. I was going to cover crude today because crude looks really interesting. I posted something on Twitter about that and also in the Discord channel for Convergent, but I need to run. Hopefully you gained something. I'll do the best that I can to be here to do these on a Monday, Wednesday, Friday schedule, but these days there's just a lot going on. I'm happy to stay connected with you, and of course, if you have comments, you can always comment on the video and let me know what you think can be done better. Take care, and I'll talk to you hopefully on Friday. Take care.